What's going on, everyone? Thank you so much for tuning in. My name is Usman and I am an options trader. I have been trading options for about 5 years now. My whole trading strategy is day trading and scalping options contracts. I flip the premiums. I don't tend to hold them for too long unless if it's unless the opportunity is very good. Other than that, my main strategy is scalping and day trading. And for that strategy to actually work, I rely heavily on something called level 2. This is a topic that a lot of people want to get into, but the problem with that is that there's not a single source out there that compiles the whole information on level 2 into one particular place. You kind of have to go look here or a different website or a YouTube video, and it just doesn't really click. So I took some time and I've broken down how to read level 2 in the most simplest way that I can think. And I'm going to divide these videos up into multiple different parts. Every single part is going to have a little bit more advanced information, but this particular video we're going to talk about the basics of level 2, right? How to read level 2, what's the basic concept behind level 2, and how to kind of read it. And every week I'll try to make a video. I'm gonna also post a live trade I took today, getting in and out and what I was watching in level 2 to kind of help you guys. But the first video we're going to be just talking about how to read the level 2 and take it from there. Right, so basically the way I look at level 2 is that it's an auction before the candle formation. All right, now we all seen these candles. Now typically the red and the green candle both have a high and a low at the same price, right? And the only difference between these two candles is the green candle has a low opening and a high closing, and the red candle has a high opening and a low closing, right? Now, but before this open price happens on either one of these candles, right, there is a small tug of war going on behind the scene between a buyer and a seller, right? And they're not agreeing on a price. Once that agreement comes into place and a buyer takes that stock from the seller at a particular price, it is then transformed into a candle, right? Up until that point, we don't see any movement. Now, if you're able to actually see that auction happening, I call it auction because that's, I think, the easiest way to kind of explain it to everyone. If you're able to actually understand that auction happening and you're able to see who is stronger, if it's a buyer, buying side is more stronger, or if the sellers are more stronger, if you can grasp that idea very quickly and you're able to read who's stronger and who's going to be pushing the stock up or down, you can actually get in before a breakout or before that major move happens. Now let's look at this example. Right now we have a stock price which is right now valued at $10, okay, and we have a buyer and then we have a seller. Right now the buyer wants to buy this stock, but he thinks it's overvalued by 10 cents and he wants to buy it for $9.90, but the seller thinks this stock is undervalued and he wants to sell it for $10.10, an increase of 10 cents. Right now the difference between what the buyer wants to buy it for and what the seller wants to sell it for is called a spread, right? So this is another topic that we're going to cover in future videos, but just to kind of give you a basic definition of this, the spread is the difference between what the buyer wants to pay and what the seller wants to sell that stock for. Okay, this is something we really need to pay attention to when we're looking at the level 2 pricings change, but we'll get to that in a different video. All right, now there are two types of quotes. There are level 1 quotes and level 2 quotes. Now level 1 quotes, they display us the best bid, ask, and volume, okay, which is the highest bid and the lowest ask available, right? So this is very typical information. When you open up a stock chart, it's the information displayed right on the top. I'm going to break that down for you guys next. Now the size that we see next to that bid and ask, it is always times 100. Okay, so you might see 5 or 10 or 25 or 30, whatever that number is next to that best bid and ask price, you have to times it by 100. Okay, now this is how a typical level 1 information is displayed. Now we have the ticker symbol followed by what the company name is, all right, followed by the current price of the stock. And then we have the price change from open. Now in this particular example, we're looking at AMD. The current price of the stock is $50.97. From the open, we're up $1.2 and 2.42%. Okay, this information is again displayed to us one more time. Again, if this is, by the way, Thinkorswim. If you guys are using a different platform, it might be displayed a little bit different, but at the end, the information should be pretty much the same across all brokers. Then you have your bid and your volume. Volume is referred to as the amount of shares this person is trying to buy. All right, so in this particular scenario, we have a buyer who's trying to buy AMD at $50.97. And there are 36 orders, meaning 36 times 100. Okay, now these buyers can be multiple people or it can be one person. We really don't have any way of finding out if it's coming from five people or just one person. Okay, now on the next screen we have the ask, which is the sellers. Right, so in this case we have someone selling AMD or trying to sell AMD at $50.98, and the volume is 26, again times 100. Okay, so that means there are 2,600 shares that someone is trying to get rid of at $50.98, while someone is trying to get in AMD at $50.97 of 3,600 shares, right? So this is very typical information. It's not really that helpful in day trading. It's not going to tell you if the stock is going to go up very fast or go down. You can't really use this information to judge all that. So let's kind of break this down into an illustration. So let's say this is your buyer, this is your seller. All right, so the buyer wants to buy AMD for $50.96, while the seller wants to sell it for $50.98. And then we have the amount of shares that they are trying to sell. Okay, now this is the illustration I'm kind of going to use to help you understand how level 2 works, and then we will take this data and we will translate it into looking at the tape to kind of have a better understanding of how to read the level 2. Okay, now depending on which side is going to be stronger with volume, that side typically has control of the price of the stock. So if there's more buyers, right, stock typically starts going up. But if there are strong sellers, we see a pullback. Now that is where level 2 comes in. Okay, now this is your typical level 2 screen. So let's break this down. Again, your level 1 information is displayed right there on the top. And then you have your market makers and ECNs displayed on both sides of your ask and your bid. Okay, now market makers and ECNs are also another topic that I'm going to make a video on, trying to break it down for you guys. But just to give you a basic definition, when we place an order through our broker, that order is then put into the market and trying to buy it from someone else or trying to sell it to someone else, and it goes through the exchange, right? So when you place an order and you have your level 2 open, you should see your order pop up in one of these sides. Okay, now followed by the price that the buyers are trying to buy the stock at, and then on the right side where we have our ask, right, we have the sellers trying to sell the particular stock. Now if you guys take a look, right, in level 1 we only had a little bit of information, right? It was only telling us that there's someone trying to buy AMD at $50.97, 3,600 shares, while someone was trying to sell at $50.98, 2,600 shares. But when we look at level 2, now we can see that on the buying side, we don't just have 3,600, we have multiple different buy orders, right, with various different bid size. Now again, this number that we mentioned earlier has to be timed by 100, right? So we see two 3600 share orders coming in from two different exchanges, all right? And on the opposite side, where there's sellers, we don't just have the 2600 shares that someone is trying to sell for $50.98. We have multiple orders of someone trying to sell those orders. Okay, so this is just a basic concept of how level 2 looks like, but there is much more deeper information when you're looking into level 2. Now if we look at these numbers below the best bid and ask, we're going to see that there are these strong orders sitting at these particular price points, right, on both sides. On $49.09 on buying side, we have a 15 order sitting there, and on the selling side we have a $51.80 seller of 15 orders sitting there, right? Now this kind of helps us understand if there is a wall of sellers or wall of buyers stacking up, waiting to push the either stock down or push it back up if it goes on the downside. Okay, now we're going to come back to this particular picture and I'm going to break this down more, but before I do that, I'm going to show you how this looks like on a illustration that we were looking at earlier. Now let's say, right, I'm going to break that down. Let's say we have these buyers and these sellers. Right now the price of the stock is $50.97. We are going to look at, first thing we're going to look at is those orders that are displaying at a higher price and a lower price, right? So now on level 2, we have an order, let's say at $50, okay, and we have a strong order of 15, okay, meaning there are 1,500 shares that someone is trying to buy if the stock goes down to $50. Okay, and then above $50.98, right, let's say we have it at 51.50. Okay, now this is another wall. Now here we can say we have 2,000 sellers sitting there, right? So now depending on who is stronger, if it is more volume coming in from buyers or more volume coming in from sellers, we have a basic idea of key levels that if this particular stock, AMD, which is at $50.97, goes down closer to $50, buyers might get aggressive around $50 mark, right? So at this point, we can go and look at our key levels on the chart just to see if we have any key level around $50. So that's another indication that, all right, a $50 mark is a very strong key level. If the stock starts going on the backside, buyers might step in at $50, or we might see a little bit of resistance unless if sellers get more aggressive, right? Now, if this stock starts moving on the upside, we know that we can see a little bit of rejection or a pullback around $51.50. That's where there's sellers stacking up, right? So this is just to kind of put that picture into perspective of this particular illustration, just so everyone gets a very basic and simple idea of how level 2 works. Now let's take a look at how these stacked up buyers at $50.97 and stacked up $50 sellers at $50.98, how they look like when we're looking at the picture, right? So based on that, it's showing us that we have stronger buyers, right? So now when you have more people trying to push a particular object or something, and there's only one person or very little people compared to the strength on the left side, which is stronger demand and higher buying power, you will always see that when there is more demand and less supply, the stock typically moves higher. Okay, so based on that, we have stronger bid size, we have small volume in sellers, and we have a strong volume on the buyer side, right? So let's say over here we have 500 buyers and we only have 100 seller sitting at $50.98. Right, so looking at level 2 and looking at this picture, it's pretty obvious that the price of the stock is going to start moving on the upside, right? So $50.98, they might give this up, and the stock price is going to continuously carry on until we see sellers stepping in. Okay, and this is what it might look like. So to break this down, now let's say we have, again, 500 sellers here, 500 buyers here, and we have a seller at 51, meaning the buyers are still consistently pushing the stock in a higher price. But now we see that there are sellers waiting at a higher price of $51.10, right? So now what we want to kind of see is, once we get to that particular level, do we still have aggressive buyers? If we still have aggressive buyers, the chances are that this particular object that they're pushing is going to get pushed right through them, and the stock is going to continue on a high uptrend, right? Or if the sellers are much stronger than the volume from the buying side, they're going to push the stock right back, and there's going to be a little tug of war, and depending on who has a more stronger side, they're going to take control of that particular stock, right? So let's go over scenario 1, and we will, so in scenario 1, what happens is, from here we have 500 buyers, and as they get closer to 51.10, what happens is at 51.08 we have a big drop of buyers, and let's say now we have only 200 buyers or buy orders at 51.08, right? But at $51.10, now we have much more aggressive sellers who are trying to keep the stock below $51.10, right? So now this is kind of showing us that, all right, there are more aggressive sellers on this particular price point, and they might start pushing the stock back down. Now, so if you're in a position, what happens, you want to take your position out, or you want to wait to see if there is volume coming in from the buyers, see if buyers actually get aggressive and they push these sellers out and they push right through them. Now, what can happen is, in scenario 2, is buyers get more aggressive, right? And we see an increase in buying bid size. They go from being at 200 all the way up to, let's just say, 1,000. Okay, we have 1,000 buying orders coming in at $51.08, while sellers at $51.10, their volume drops down to only 200, right? So now this is a typical response that there are not enough sellers, there is more demand, they're much more aggressive, and they're going to push AMD stock above $51.10. So at that point, you go back to that level 2 screen that we were looking at, and just kind of translate that into the screen that we're looking at here. This is telling us that, all right, so buyers, there is more bid size. Okay, this is very important, meaning we have maybe 50,000 orders of buyers coming in, while the sellers are much weaker, and they're not able to actually keep the buyers from pushing the stock up. And what happens in this particular scene is that the stock price keeps rising. Okay, and this is very important. You need a lot of practice to read this, but this is like the most basic thing that you need to understand to get started into reading the tape. Now, going back to this, as buyers get more aggressive and they start pushing the stock higher, if the sellers give that price up, we will see that it's going to keep, the price of the stock is going to keep going higher and higher until we see sellers stacking up at a higher price point. So let's say $51.10 is where there were only 200 sellers. We have 1,000 buyers at this particular price point, and you know, they're continuously aggressive and they're pushing the stock up, but we see that at $51.50 now we have 1,500 sellers waiting, right? So now that's where you start looking at that key level for scalping, that all right, as we get closer to 51.50, does this number increase? Is this number going to decrease? These are the basic concepts of reading level 2 and reading the tape. Now, some of the things that you need to understand are the spreads. All right, I'm going to break that down in the next video. The bid or ask size. You also need to understand how time and sales work, and volume. And level 2 cannot work without fully understanding key levels such as VWAP, intraday levels, moving averages, and etc. You need to be able to read all of those information to actually put level 2 together. Now we're gonna go over AMD's chart, right? So before we go over that, just to kind of refresh everyone's mind, these are all your buyers and these are all our sellers. Okay, now this is that big order I was talking about. If in case this stock price gets pulled back, we know that at $49.02, or we could just leave it at $49, that at $49 we might have somewhat of support from buyers and they might push the stock up if it comes down there. If not, on the upside, we know that at $51.80 there are sellers sitting there, right? Now we can't really use this in a way that, all right, it's going to go there and it's not going to get rejected up until it gets to 51.80, or on the downside until it's not going to bounce until it goes to 49.09. That is not always the case. These are just orders trying to, like, giving us extra information on where key levels might be. Okay, even if the stock is at $50.98, we can see a rejection way before 51.80. Sellers can get aggressive maybe at $51.50, or they can get aggressive at $51.20, right? It doesn't, you can't really use this information and say, okay, my target is going to be that particular number. Now this is just kind of giving us that this is where buyers or sellers might get aggressive, right? But before that, there is a chance that they might get aggressive before that as well, and that's why we need to pay attention to the best bid and ask prices that are showing up, right? So now I'm going to press play, and as I press play, I'm going to break down what is being displayed at this particular trade, right? So we're looking at AMD right now. I'm going to hit play. Now we're going to see that this is right now, buyers are at $50.97. Sellers are holding at $50.98, and they keep pushing the stock down. You see how the ask size is very aggressive. Now, as we have those retests of that level, what we want to see is that if the ask size decreases in numbers, if it comes up as 500 and then it pulls back, and then when it retests that particular level, if is 500 still there. If that number drops, that means the sellers are giving up that particular level, right? And same thing for buyers. If you're watching it on the downside, and let's say we have a key level of $50.50, as they're retesting that level and sellers are getting aggressive, if buyers are not dropping in their bid size and that number is continuously increasing, that means that they're much more aggressive and they want to keep holding the stock above that price point. Okay, so again, over here we see slight rejection at $50.99. Sellers are much more stronger and they keep pushing the stock back down, and we see that the bid size is starting to increase. If you guys rewind the video, you're going to see that these numbers were much less than the ones here, and as they get more aggressive here, we see that little pop closer to $51. Once we get closer to 51, there was a huge order of close to, I think, 300 to 500 sellers, and they pushed the stock right back down below 51. Now, one of the best ways to kind of learn level 2 is if you're day trading, or if you're not even trading and you're done trading for the day, just put on a screen recorder, put on your level 2 and watch price action. And then what you can do is there's a program called VLC Media Player. You can replay that recording in a very slow manner, and then you can try to read these level 2, because it's going to take some time for you to train your eyes to be able to fully understand how level 2's bid size and ask size increases and decreases, and how much of that actually affects the change of the price of the stock. All right, so now when this stock goes and retests $51, what we want to see is if that ask size, that huge ask size that we saw of closer to, I think, 300 to 500, if that number is still there. If that number is not there, if we see a much smaller number, like for example, 4260, but on the bid size we see a stronger number of 50, 60, meaning that the buyers are getting much more aggressive, that's a very high probability that they're going to break through 51 mark. Okay, so I hope this video was helpful to you guys. I'm going to break down more concepts for you guys. My whole idea behind making these videos is that I want to help people who are just starting out, as well as people who have already been trading. So I'm going to try to, the next video that I'm going to be posting, I'm going to try to post some of my entries and exits. I like to trade with recording my screen because it kind of helps me understand my mistakes as well. As traders, there's always a chance of a mistake, and there's never a time when you're always going to be green. So the whole idea of trading and how to get better is you need to constantly monitor your trades. You need to go over your trades as many times as you can, and the best way that I found helps me is by recording my screen. So I have a few recordings of my screens of getting in, getting out, and I'm going to be breaking those down for you guys next. And part 2, I'm going to break down market makers, the ECNs, and as well as the spread, and what to look for, how to kind of identify if the stock has a higher chance of breaking out on the upside or if it's going to get rejected. Alright guys, thank you so much. I'll see you guys in the next video.